and Tesla down 7.5%, the worst mega cap.
Is this weakness being driven by either Musk selling or China delivery risk or just broad consumer risk on the demand side?
Cathie Wood is hitting the brakes on Tesla as the EV maker falls to the second spot in the ARK Innovation ETF. Its first fall from the top spot in nearly 5 years.
In this video, Tesla stock plunges again amid stock market turmoil. Some big news as Tesla stock loses the top spot in ARK Invest flagship ETF, and a long-term Tesla bull and stock analyst says he remains very bullish on Tesla. So let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks. Check out the links in the pinned comment below. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. So check out the links in the pinned comment below, and thanks for your support. First up today, Tesla stock getting absolutely slaughtered. I feel like a broken record here. Up, down, mostly down. Plenty of buying opportunities in my opinion. Tesla today down almost 7%, shedding another $46 per share. Putting things in perspective now, year to date, Tesla stock down almost 50%, and over the 1 year, up a mere 3.88%. That's right, ladies and gentlemen, Tesla stock now within 4% of a 1 year low. Quite an impressive feat considering Tesla's incredible execution over the past 12 months. I got a funny feeling $628 per share for Tesla stock won't age well. The bloodbath isn't just limited to Tesla. The Nasdaq 100 down today over 2%, heading over to the ARK funds now. The flagship ARK fund, part of the subject of today's video, down almost 7%. To put this in context, over the last 5 years, up a mere 38.8%. Still a pretty damn good return, but it has been quite the bumpy ride. The ARK W Next Generation ETF down almost 7% today as well over the last 5 years, up almost 50%. Bit of perspective always helps. The ARK Genomics Revolution ETF getting slaughtered, down over 5%. Last 5 years, up about 50%. ARK Q Autonomous Technology and Robotics ETF down today almost 4% over the last 5 years, up about 75%. Amazon stock getting crushed today, down $69 per share, representing over 3%. Google's parent company Alphabet down almost 5%. Apple down almost 2%. Triple Q down over 2%. One of ARK's favorites, Roku, down over 13%, nearly 14%. And a huge anomaly, Zoom, up almost 6%. Let me know in the comments below if anyone's been buying the dip, or if you've just been crying in the corner asking for daddy to hold you. For the record, I bought a whopping 1 share of Tesla stock today at $621.69, because that's literally to the cent the exact amount of money I had in my account, and I thought, you know what, let's put in a buy order just in case we get there. Total fluke, but the order executed today, and I'm now 1 Tesla stock closer to my goal of owning the entire company. And before we move on to long-term Tesla bull Colin Rush of Oppenheimer, who remains very bullish on both Tesla stock and Tesla the company, a little bit more discussion about Tesla stock falling out of the #1 spot in ARK's flagship fund, the ARK K ETF.
Cathie Wood is hitting the brakes on Tesla as the EV maker falls to the second spot in the ARK Innovation ETF. Its first fall from the top spot in nearly 5 years. Yahoo Finance's Alexandra Semenova joins us with the details, and this took me by surprise because she has made it clear over the years Tesla was 10 or 11% at one point. How did this happen?
Yeah, that's right, Jared. Tesla has lost its top spot as the top holding in ARK Invest's flagship exchange-traded fund. The company slipped down late last week following Roku, and then briefly slipped to third place before Cathie Wood bought up $10 million worth of shares yesterday that brought it back to second place. Very interesting, given that Tesla has held this position for nearly 5 years as its top holding. Up until recently, Tesla has also been a relative outperformer for ARK, as its other stock picks, just saw a tremendous downturn. And it's been steadily trimming its stake in Tesla now for 4 consecutive quarters. The value of Tesla that ARK owns now has shrunk by half since the beginning of the year. So I did reach out to ARK Invest and I asked them to explain this, but they declined to comment.
But at the same time, they declined to comment specifically, but they talk often, right? They're pretty transparent. Do we know why do we have any clues as to why we've seen this slip amongst the top holdings?
I mean, there's no doubt that Cathie is still a big Tesla bull. Last week when Tesla got booted off of the S&P 500's ESG index, she quickly came to its defense on Twitter and called it ridiculous. Last month, she raised her price target on Tesla to $46 $600 by 2026. So a big Tesla bull. So this certainly could be a matter of the mechanics of the daily trade activity.
Bingo. You guys catch that? I've got to say, quick aside here, I'm actually impressed. I've spent almost the last 3 years roasting the clowns on Yahoo Finance for knowing literally nothing at all to do with anything relating to Tesla and Elon Musk, occasional exceptions, but generally speaking, completely clueless. The reason for Tesla slipping out of the #1 spot in ARK's ETF is, in fact, to do with their daily trading activity. I'm actually really surprised that so far this little piece from Yahoo Finance didn't lead with, oh my god, the world is ending, Cathie Wood has lost faith in Tesla. Instead, there was actually some reasonable discussion here. Seriously though, I have to give credit where it's due. As far as active trading, look, I personally don't have a big enough brain to be actively trading in and out of stocks, trying to time the market, make a little bit of alpha here. I'm a really boring investor. I only own one stock, Tesla, and I've only ever bought that stock, never sold a single share. Literally the most boring stock investor on planet Earth. But hey, it's working out so far. ARK Invest, on the other hand, have an active strategy. If one stock they own gets crushed by 30%, but another stock they own gets crushed by 70%, they may actually sell the stock that's down 30%, which might seem strange. Why would they sell for a loss to buy the stock that's been even more heavily beaten down, with the belief that over the long term they'll make a much bigger gain on that? This is an exciting and potentially dangerous strategy, but seems to be working out well for ARK Invest. And I think in a few years' time, when we see the stupidly cheap prices that ARK were picking up stocks left, right, and center, people will once again be calling Cathie Wood and ARK Invest geniuses. And that being said, because ARK has a self-imposed limitation, they can't buy more than 10% of a single stock in one fund, and they can't really let a stock ride past about 12 or 13% before trimming. This means that if one stock outperforms overall compared to the rest of their fund, the actual number of shares they own in that company is going to continue to plunge over time as they keep trimming down while that stock exceeds the 10% threshold. This is why the limitation I have on my own fund, my personal investments, is approximately 100% for a single stock. After all, if the conviction is there, why would I limit myself to a tiny sliver of a company when I could just buy as much as I want to?
But it does raise the question, as we see Tesla, as we see growing investor concerns about Elon Musk's acquisition of Twitter, it does raise the question about whether Cathie Wood is slightly less bullish, perhaps. And it certainly wouldn't mark the first time that she, drastically changes her mind. Last month, she invested in General Motors after, warning that the company could go bankrupt just a few months ago. So she has a lot of explaining to do to investors.
I'm simultaneously confused and impressed. This Yahoo Finance anchor actually has a comprehensive understanding of what's been happening and can add some valuable contributions. And by the way, regarding the GM stock purchase, boy oh boy, Cathie does have some explaining to do. But let's talk about this. For those that don't know, General Motors are going bankrupt this decade. You can fucking count on it. However, the reason for ARK Invest's purchase of GM stock, still an absolute head scratcher, is to get a slice of Cruise Automation, which they believe to be massively undervalued. In other words, GM goes bankrupt, they spin off Cruise ends up being the asset that ARK's really interested in. Personally, still wouldn't be making this gamble, but that was their rationale. The other thing, I believe that it wasn't necessarily Cathie Wood's decision to buy General Motors stock, but the folks who head their research around autonomous vehicles. Now, who would that be again? Tasha Keeney. I cover autonomous technology that flies and rolls. So the question is, did Cathie Wood decide to invest in General Motors stock, or did Tasha Keeney, or did someone else?
Sure, Cathie Wood is pretty transparent in terms of publishing her daily trade activity and research notes, but as the fund continues to fall, a lot of her moves have been really raising eyebrows among investors.
Well, key line there I'm kind of honing in on is that Tesla has not fallen as much as the others. So if she's punting along in some of these disruption names that have been so beaten down, she might just see the opportunity for quick, and she's a trader, and it is actively managed, so maybe that's what she's doing.
I'm actually just so impressed. Again, credit where it's due. 2 from 2 on this panel so far who've spoken, actually said reasonable things and had some potential explanations for this, rather than, oh my god, Cathie Wood no longer likes Tesla, it's the end of the world, sell your Tesla stock. I'm impressed. I shouldn't be, but I am. But now over to long-term Tesla bull and stock analyst Colin Rush of Oppenheimer, who for the record is one of the most successful stock analysts on Wall Street, which I know it's not saying a whole lot, but I do have to give credit where it's due. So here we are over on tipranks.com, Colin Rush's profile here, 5-star rating, ranked number 5 out of 7,897 stock analysts on TipRanks. I guess you could call Colin the anti-Johnson. Over the last 1 year, which isn't a huge window of time, but that's all we've got to go on. Over the last 1 year, the average return on stock recommendations, e.g. buy, sell, etc. from Colin, 55%. How many of you could say the same? Seriously, credit where it's due, Colin is absolutely slaying it. And for a little bit of perspective, Colin gets Tesla. I mean, really gets Tesla, and has for a very long time. initiated coverage on Tesla stock with the buy rating back in March 2013. Almost a decade ago. Not one sell rating on Tesla stock in the last decade. Buy. Hold during production hell, fair enough. Hold, production hell solved. Buy. Credit where it's due, seriously. Colin Rusch, a beacon of reason and understanding among a sea of idiocy and stupidity when it comes to Wall Street stock analysts understanding Tesla. Had you followed Colin's recommendations on Tesla stock and began purchasing back around $6 per share, for the record, we're 100x up from that point in time, I think you'd have done relatively okay. I'm a big fan of giving credit where it's due, and honestly, Colin is an absolute beast. And his successes aren't just limited to Tesla stock, which is so important to understand. Colin covers a load of different stocks, and as we saw, the average return over the last 12 months, 55%. What an absolute beast. So now let's hear what Colin, who clearly knows what the he's talking about when it comes to Tesla stock and Tesla the company, has to say today about, you guessed it, Tesla stock and Tesla the company.
I wonder, to the degree you can separate Tesla from the overall tape, is this weakness being driven by either Musk selling or China delivery risk or just broad consumer risk on the demand side?
I think it's all of the above at this point. There's definitely some risk off and some sizing of positions happening here. But I think there's some acute concerns around China COVID policy and what happens with the supply chain and how much production actually comes out of that Shanghai facility, which really is a meaningful margin driver for the company. And so folks are worried about units and margins, which we're not super concerned about right here.
Notice Colin pointing out there that there's a lot of concern in the broader stock market about Tesla margins coming down and delivery numbers, but Colin, we're not concerned at all.
What is your Q2 delivery estimate?
We're just above 300,000. There's probably some adjustments that'll happen as we get through the balance of the quarter. What we've seen with this company is that they really can, drive an awful lot of volume very quickly at the end of the quarter. We're really not giving them credit for either Austin or Berlin, and we'll see, kind of what comes out of that facility here in the next couple of weeks. But really, you can't get a feel for the numbers until the last couple of weeks of the quarter, and so we'll see how the next few weeks go, and we'll make a gut decision on where we want to end up on those numbers.
They do say they're going to try to get Shanghai back to pre-COVID levels in terms of production, pre-lockdown levels by tomorrow, a delay basically of a day from their prior guidance. How much is riding on this one particular facility?
Short term, it's important for the numbers, but I don't think it really shakes the thesis at all.
Yes. Short term. Sure, some fascist, futile lockdowns in Shanghai, that'll hurt Tesla's production over the short term. The stock market's panic about Elon Musk being distracted with the Twitter acquisition, short term. But as Colin points out there, this doesn't change the thesis about EV adoption and Tesla's technological lead. It's important to understand this. While the stock market is panicking and dumping Tesla stock over short-term concerns, nothing whatsoever has changed about the long-term thesis and Tesla's obvious sustainable dominance.
What we're focused on with this company is really the learning cycles and the accelerated learning cycles relative to peers. They've demonstrated that they can do that both in terms of technology development, manufacturing, throughput, and also on the autonomous side. And so I think as we get through the balance of the quarter and you see all of this anxiety get built into the stock, we're expecting them to actually put up better than feared numbers, and you start to see some momentum on the other side from here. And if you go back a year, this is about the time last year when we saw the lows on the stock. And so I think there is also some positioning for the summer that folks are getting ready for, and the potential for a soft summer market. And our view is that this company continues to execute well, even if Musk is distracted. They've got a strong second line of management here that really do drive the business, and we're still very bullish on the stock, especially at these prices.
And I too am extremely bullish on Tesla stock at these levels. If only I had more money. P.S. Thinking of starting an OnlyFans? Let me know in the comments below if you'd like to see that exclusive content. Willing to do just about anything to buy more Tesla stock. I'm just kidding. Sorry to disappoint you guys. And yes, I do mean guys. Let's move on. So, quick recap. Cathie Wood and ARK Invest no longer have Tesla stock as the number one position in their flagship ARK ETF. And that means absolutely, approximately, literally nothing. It's just a result of some stonks going up and some stonks going down and a bit of active trading. As I said earlier, my brain's far too small to be actively trading in and out of positions despite potential opportunities, so I just keep buying Tesla stock with every spare cent and holding on to it. Seems to be working out okay so far. Some impressive voices of reason who actually did their homework on Yahoo Finance. Again, I mean seriously, credit where it's due. Speaking of credit where it's due, Colin Rusch spitting some facts, making complete and utter sense about Tesla stock and pointing out that everything that's happening around Tesla stock, deliveries, Shanghai, lockdowns and the macro environment has nothing whatsoever to do too, with the long-term thesis and Tesla's continued dominance. Translation, Tesla stock seems like exceptionally good value at these levels, according to Colin, and also according to my own personal activities, aka loading up with every spare cent, which wasn't much today, but hey, 1 share's better than 0 shares, right? And finally, don't forget to join Patreon with the card in the corner or the link in the pinned comment. Gain up-to-date access to my Tesla stock price targets. By the way, massive update to my Tesla price targets and valuation model dropping in the next few days, maybe week, so stay tuned for that. And all Patreon supporters gain access to an archive of well over 100 Q&A videos, plus the ability to participate in future Q&As, loads of other exclusive content and perks, so I'll see you over there. I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.